All right, team, how you doing? This is Renzo again from Task Force Financial Freedom, or TF3. And today, I think is the first video where I'm actually showing my camera. And I want to give a shout out to my nephew, Mike. He's also here on the screen. And a shout out to my wife. We've been trading together, and Mike has been following my videos, and he's following our trading strategy for a couple weeks now. And today I just want him to share his experience. So let's start with asking a few questions. Mike, how are you?
I'm good.
So how long have you been with us, like following us and
Uh,
training with us?
Following you guys, I think it's been about a month, like 1 to 2 months. I've been following you guys, just taking some advice
Okay.
and trying it here and there.
Okay. So how's your experience? How has it been?
Uh, at first, I didn't know like what I was doing, but the more like you guys taught me, like the more I kind of picked up on it, and now I'm getting gradually a little better and better at it.
Nice, nice. So some of the things that we've been training on have been support and resistance, right? So let's do a
Yes.
quick review of the importance of support and resistance, because that's pretty much what we've been doing for about a month or so with you. We've been playing support and resistance and a strategy that we call breakouts. So let's take a look at today. Uh, we go into the 4 hour chart right here. And what did we say today? You remember what we said at the beginning of the day? By the way, this is the Nasdaq. This is the chart of the Nasdaq. Do you remember what we said today? What were the two possibilities that we had today? Remember?
It either get rejected the resistance line or it could break through.
But why would it resist it, and why would it break through? You remember what we said about that?
Um, hmm, Not necessary.
It's okay. So check
It's
this
not
out.
mine.
No, this is why we gotta continue to train, right? Like, for example, we've been doing this, and we've been validating our strategy with my wife and you. But that doesn't mean that I'm an expert. So we gotta continue to train and train and train, and the more we train, the easier it's gonna become. But we have to have a good strategy, right? So what we said this morning was we have the price was at this level right over here, okay, on the screen when the market opened. But if we look at to the left, we had this big resistance, right? And this was back in February. But in February, we had a catalyst, right? We had a reason for the market to go down, and that was the coronavirus, right? So all the shops, all the businesses closed. We had some really bad response for the pandemic and whatnot, and then we had this big drop due to the coronavirus. So this morning we looked at the news, and what they were saying is that they were halting the production for Johnson and Johnson, but Johnson and Johnson is one company, and the Nasdaq, right, has a lot of the tech companies. Facebook, Amazon, Google, Netflix. So those are big companies that are going to push the Nasdaq and the SPY, the S&P 500. So the catalyst was not as strong for the Nasdaq as it could have been for the SPY. That's something that we talked about this morning. So we had two possibilities. We said if this in fact is going to reject the price, then we have a few points of entry, right? So one point was going to be, let's move to the 1 hour chart right here. Okay, and what we do is called multi-time frame analysis, because we need to make sure that we understand what's happening in the big time frame so that we can decide our entries on the smaller time frames. So we said if the market rejects the price right here, now we can see a potential bounce right here. And why did we say this? Because if we look, that's the high of this pre-market on this day, and then it was the high of 2 days ago. It was the high of yesterday, right? So that in all pre-market, was acting as resistance, right? So we said if the price rejects, we have a very good chance of bouncing on this area. But if it continues to break down, now we have this other area right over here, because look at all this support and resistance, right? So we have two areas pre-market that were well identified. But the other one, the other possibility we said is that if the market continues to break to the upside, now let's go to the 5-minute chart so we can see a better have a better view of what happened today. So we said if the market continues to break to the upside, now we have this high of the pre-market, this candle right here, right? Sorry guys, my allergies are kicking my butt today, so anyways. So we said that if the market did not reject the price, it had to break this high of the pre-market. So what happened is today we continue our strategy of breakouts, and we waited until the market opened, and we gave it about a few minutes, about 10 minutes or so. Let's go to the 1-minute chart so you can see minute by minute what our decision was. And the market opened, and there was a lot of support. So the market did not want to go down. And once we broke above this pre-market high, right, this high of the pre-market, at the beginning of this next candle, that's when we got in, and we've been riding this all the way up to here, and then we did a couple more breakouts. So altogether, today we made good profits, and it's only 10:09 in the morning, so we getting better at identifying the breakouts and the possibilities for a bounce or to short the market, right? So right now it looks like the market wants to go back up and is doing another breakout, but right now we have a lot of resistance right here, so we would not play anything until it breaks above all these highs and continues to go up. But it's a little tricky because the market is at all-time highs, so there is no ceiling, right? So it could just go up and come back down all the way and come back up again because the market wants to find stability. And also the SPY is trying to find a base or support. So that was our pre-market analysis this morning, Mike. So let's go back a few days. Let's go back to the 15-minute 5 days. So last week we played the same strategy. You actually traded on Friday. We didn't trade Friday. And what did you do on Friday? How was your analysis on Friday? Like this day right here.
So on Friday, what I observed was like it was a very slow day, and I just waited for breakouts. There were little breakouts I had to wait for.
Okay.
And then I jumped in for calls or puts.
Okay, so those little breakouts, if you add them up, that's good. That's good gains, right?
Yes.
So if you were to give an advice to someone who's starting to trade, what would you tell them?
I got two things. I actually got two things.
Okay.
First, be patient. Don't jump in right away, especially when the market opens. Like, wait a good 15 to 20 minutes to like get a feel for it. And then the second one is old support zones become new resistance, and old resistance become new support zones.
Good. How about your risk to reward strategy? Have you watched that video? Or do you remember when we talk about if the trade reverses on me, when do I get out so I don't lose money or as much money?
I don't know exactly what was said, but
okay. Well, let's do a quick review, okay? Because that's part of your strategy, right? So the strategy is not so much how much money we can make, but it's also how much money we can avoid losing. So the one thing that I always struggle with, and I don't know why, because when it seemed like we knew what we were doing, then we get a loss and we lose all of the gains for the day, or we lose more than that, right? Because we continue to hold it. But let's do a quick example of risk to reward. So let's take a look at this day right here. I don't know what day this was. Maybe Wednesday. It's one of those days that we played a lot of breakouts. So let's say that we were to enter here, right, at this candle right over here. So we put our price and we say we enter right here. So let me actually move this out of the way, and I want to put some notes. Okay, so we're going to put a note right over here, and we're going to say we enter here, right? So we enter here, and we said, okay, if I enter here, when do I get out, right? Because if it goes against me, when should I get out so I don't lose money? So now we know that the pre-market low was over here, right? So I want to give myself a little bit of room for this to develop, right? So if I enter here before this candle moved up, then I will say, okay, if I enter here, I will get out. This is my stop loss, exit, okay? So my stop loss is going to be right at this low of the pre-market. So if it breaks below this low of the pre-market right over here, then I will get out. So I still giving myself a little bit of room for the trade to develop. But if it breaks below these lows, right? So that's what I'm establishing. That's my level of risk. Okay, your level of risk could be different, but my level of risk said I will get out of the trade if it goes against me, and that's my stop loss. So I'm stopping my losses. I'm cutting my losses if it goes below this point, because it might continue to go down. Okay, but if it goes in my favor, when should I collect my profits, right? So I'm gonna have a few targets. Target number one is gonna be this area right over here, right? Because we have resistance, and look what happens. We have a little bit of resistance. So I'm gonna have PT is profit target number one, right? So that's my profit target number one, would be this area. So as the price starts to go up, right? Now we start to move our risk, our stop loss. We start moving it higher and higher, so that if the market reverses, we're still collecting all the gains that from when we enter. Remember, we enter right here. Our stop loss was down here. So now that we're in profit, we move it up. So the price continues to go up. We continue to move our stop loss right over here, right? And why do we do that? Because we don't want this to reverse all the way down and we miss out on collecting all these profits. So now we have target number one, and now we're gonna do target number two. Target number two is gonna be this high of the day, because we know from what we've been experiencing is that 8 out of 10 times is gonna try to test this level. So as soon as the market continues to go up, we continue to move our stop loss. So if in the event that the price moves down, we get out of the trade, but we collected all of these gains, and we don't lose, we don't miss on the opportunity of collecting all of this. If we were doing a small breakouts, then it'll be something like this, right? We enter, price moves out, we get out, we move our risk strategy tighter, so we don't miss out on a lot of the gains. Okay, so that's something that we need to continue to practice, Mike, because we're keeping our risk really tight, but we also keeping our runners running, right? Because we need to make sure that we can collect and capitalize on the runs. Like today was a very good day. Today was actually like a textbook trade, because we waited, we analyzed the news, there was no catalyst, we played breakouts, and we also did something called a flag formation. So this is part of your chart analysis. So this is a 5-minute chart, and we see that it was forming a flag formation right here, and it's still in a range. So this big 5-minute candle will be the pole, right, of the flag. And now we see that we're in this range. So I even drew this box because the price is in a range. That means that it's going up and down, and it has a established support and resistance, and it's not going to do a substantial move until it breaks out of that range, either to the downside or to the upside. But right now we're done. I think we traded all the way to here, to like 10 o'clock, 9:50, and we collected our gains, which is good. It's fine. Okay, so So lessons learned, I'm gonna do a few takeaways from what we've been doing, what we've been learning is support and resistance, right? Support and resistance are not just lines on the chart, but they're areas, because once the price enters that area, now we gotta start looking at possibilities for reversal. But we also have the moving average, right? The moving average, this is the 200 moving average, is also been acting as support and resistance. And if we see here on the pre-market, we see a lot of support on the 200 moving average, and when it falls below it is resistance, and you see here it did a quick bounce of the moving average. Here are the indicators that we have, and I want to explain this real quick so this video is not too long. We have the first one is called the linear regression. So the linear regression is telling us the momentum of the trend at a specific moment. So once it goes down, that means that it's losing momentum, right? So we can start looking at puts if it makes sense. But we combine it with the TTM squeeze. The TTM squeeze is another indicator that measures the momentum of the trades. If you see, we start going up, it's pushing strong, and then it's losing a little bit of momentum, and then it goes back into the trade. And the last one is the MACD, or the moving average convergence and divergence, which also lets us know which side of the trend we are. So right now on the 5-minute chart, we are on an uptrend because we're green, and even though it started to die down, it was just a quick retracement to continue to go up. So we combine all three, and if we read it the right way, we can do a nice trade. So let's take a look at this right here. Market opens, we get a push up, we get a push up, we get a push up, and we get a bounce here on the MACD. That's when we decided to say, okay, look, everything is pointing to the upside, but we need a clean breakout of the pre-market, right? So once we broke the pre-market and we had confirmation on all of this, boom, we went in. Now it looks like it wants to come back down. So check this out. This old resistance line or area could be a good point of support now that it's coming back down. So let's see if it stays in this area and it tests this area for a bounce back to the upside. Okay, so so that's what we're gonna wait if we want to get in. Honestly, I think I'm done for the day. Collected enough profits, and that's good for me. So Mike, are you you're combining the same indicators, correct?
Yes.
Okay, so are you reading the indicators, or you just looking at the price action of the candles, like which direction the candles and how the price is behaving for your interest and exits?
I kind of do a little of both.
Okay.
Yeah, because sometimes you only trust the indicators, because sometimes they might not be accurate.
Right. Sometimes they are, the thing is that it's not that they're not accurate, they lag. So they will not populate until the price action has already happened, because they can't tell you what's going to happen in the future. They tell you what's already happened. So yes, you're absolutely right. So in our case, our strategy is all about support, resistance, and breakouts, right? So support, resistance, and breakouts. So one more thing that we have in our arsenal that I send you is this indicator. Let me see if I can move this. Is this indicator is the trend reversal. So how do we use this trend reversal? Not because it populates means that it's gonna go that direction, right? So in this case, the market opened, and 2 minutes in, we had this reversal. But nothing here in the MACD or the TTM squeeze or the linear regression makes sense. So the way we played this is once it broke above the first candle that it gave us the indicator, another breakout, that's when we went in. And the next candle was this one, this push through that went above the high of the pre-market. So we knew, okay, it went above this line, we have a reversal, continue to go up. So we have this reversal here on the 1 minute right over here, right? And this is 10 o'clock. And what we've been observing is that around the 10 o'clock, 10:30, sometimes 9:45, we get if the market is going down, we get a big push to the upside. If the market is going up, we get a push to the downside. So look at this right here. It's 10.02. We get a reversal, and we know when it breaks below it, look what it did. Boom, it's coming back down. So we have this other indicator in our arsenal to give us a little bit of more indication or confirmation for our entries, right? But again, like you said, we should not rely on the indicators 100% because that's why we need to learn our analysis. So right now the price is coming back down to this high of the pre-market, right? And let's see how it's going to behave. It could go back here into the moving average and form a support, or it can just dance and bounce off of these areas right here and shoot back up and try to catch this high of the day. But, you know, take your profits when you can, and don't be greedy. That's the only thing I can tell everybody. And I learned that.
Minimize your loss.
Minimize your loss. And I learned the hard way with me and my wife when we think we are like, yeah, we can do this again and again and again. And then we take one loss and it washes all of our gains for the day or most of the gains. So take your profits when you can. You're doing a good job, Mike. Those small ins and outs are good. Okay? All right, so what else you want to add?
Well, I just wanted to say I just did a little put and I made a 250 from it.
Just when we were talking? Yeah?
Yeah.
Good job, man. So how much are you up right now today? Just today?
I'm up 1220 for today.
Get out of here, man. Get out of here. Get out of here. Good job. Good job. I'm not trading anymore because my phone is charging. My wife is trading, but I don't know. I don't want to interrupt her because she's in the zone right now. She's doing great too. Good job. So continue to watch the videos that I'm posting. I'm going to make another video on chart analysis, chart patterns like this triangle or this range that we have here. And hopefully it continues to help us with our trades. And we'll become better traders, okay? All right, well, this is it for today. Mike, thank you, and good job with everything you've been doing. And we'll see you next time.
All right.
Take care. Bye.